Hi everybody, this is Dan Sheridan. We're going to look at a couple big stocks that have earnings tonight and a couple trade ideas. First of all, if we look at Google, G-O-O-G-L, and again, this is very similar to the next one. We'll look at Microsoft, where they're trading at really near the highs in the history of civilization here. We've been range bound lately after a good pop up in the price chart, but we are at extreme high levels. Doesn't mean we can't go higher. So a couple ideas. The first idea would be an iron condor. You know, if you look in here, the expected move in Google for earnings is about $75. I'm looking at Think or Swim here. So $75 up and $75 down. And that would take us to about 23.75 on the upside, 22.25 on the downside. But at the expected move of 75 points, one idea I'm looking at is saying that we're not, to give us a little more room, let's say we're at 22.93, and I'm going in the April 3rd expiration this Friday, and I'm going to sell the 24.40 calls, and I'm going to sell the 21.70 puts, and I'm going to buy my hedges 10 points further out of the money on the calls and 10 points further out of the money on the puts. But you can see here, I'm getting about 150 points on the upside, twice the expected range. And on the downside, maybe 120 points. And you can tweak these a little bit. But this is bringing in almost about a $2 credit right now. So they're 10 wide credit spreads. They're about $800 of risk. So you have about a 25% of potential return. And you can, you know, if you want to put the short strike a little bit lower, I have the 21.70 as on this side. But here's a high probability strategy that gives you quite a bit of room outside the expected move. But again, because it's a binary event earnings, it could be a crapshoot. So I'm not going to do is the normal size I would do for an iron condor and say an SPX. So let's say I'm willing to risk about $1,000, I'd do one. If I'm willing to risk a couple grand, I would do two. So that's an iron condor. The other thing, let's just say I was bullish, right? Let's say if you were bullish in Google, I would place the short strike near the expected move. And this is going to be something with a much higher potential to make quite a bit more than 20%, up near 100 or 200%, but much more chance you could lose the money if you're not right in your direction or it moves too fast. So I'm looking at placing the short strike at 23.80, kind of up near the expected move, up a little 70. This is up. You could place it maybe at 23.70. I might do it. Let me just put this for you. 1 second. I hit it on the iron condor. But here's a butterfly that I set up at the 23.80 strike. And you could set it up at the 23.70 strike. Maybe I'll do that. 23.70 strike, 23.40. I think I was setting it up because we were down today. So let me go back and do it at the 20. This is fine. So I'm setting it up with the short at 23.70. We're down about 15 bucks today, aren't we? Quite a bit down. You know, I might place this just a little bit higher because it's a down day. So what I'm going to do is I'm going to set my short strike at the expected move, and then I'll make this about 30 wide on the butterfly. And you can see here's where we're at right now. This is a butterfly going for around $2.50. And you can see if we end up in this kind of tent area, which would be about 23.54 and 24.05, you can see there's a potential to make, you know, if you look at the P&L here on a $250 investment, you can make a lot, right? But if we go down, right, or we sit here or don't go up into the spider web here, you could lose your investment. So again, the way I look at it is, if I have $1,000 I want to risk, I could do one iron condor, or for this for $250, I could do 4 butterflies. So I think they're both good. One's a lot higher probability. The iron condor is probably better chance of winning, but this is a chance to hit a home run doing 4 of these butterflies. The other one that's going to be coming up is Microsoft. And real quick, if you look at Microsoft, I'll just give you one. Here's, again, playing the outside the expected move. Here's an iron condor in Microsoft, where I'm looking with the current price being at 261, going in the April 30 expiration, selling the 270 call and the 250 put. And the market maker moves, I think, like the market maker move is about $6.70. So this gets you beyond it, right? Doing an iron condor 5 wide, I'd get my hedges 5 on the upside by the 275s and the downside 245s. So you're bringing in about $1. You have risk of 400. Again, that 20% is what the iron condors are giving you. If I was more, let's say in this case, let's just say if I was more bullish on this one, I might place my butterfly maybe at the 267 on the upside. On the downside, again, I'm placing my, with the expected move around $6.50, I'm placing my short strike on the butterfly either 7 points up or 7 points down, and I'd make the spread like 10 wide. So again, a lot thrown at you here, giving you some ideas for Google earnings as well as Microsoft coming in at you today. Have a nice day, folks. Thanks.